Next, we're going to talk about Alberta because it wouldn't be a Rain It In show if we didn't talk about Alberta. In fact, I don't think it would. You could be on a show without talking about Alberta, Patrick.
Mm-hmm.
Are you considering? Let me start the interview by asking: are you considering moving back to Alberta, Patrick? Since you paid $64 for a sheet of plywood, and you probably could have got a cheaper way back, much cheaper in Alberta. I think. Are you thinking about
Totally.
moving back? Or?
Well, no, we actually spend a lot of time in Alberta. I mean, we still got a residence in Alberta and in British Columbia. So, that's why call me Mr. Alberta. I got businesses in Alberta. I hang out in Alberta, so at the end of the day,
So you're by, Patrick.
I'm bi-provincial. I've told you guys that. I've told you. Bi-provincial.
So you're not thinking about moving back to Alberta, but tell us why Alberta is the next best thing since sliced bread. Because let me tell you, it's not just you that thinks this. By the way, I like to bust your chops about this, but the number of people that are moving from other provinces into Alberta is staggering. And I'll throw a chart up there because it's never been this high. In fact, when it was really booming in like 2005 to 2007, we had 100,000 people roughly incoming, and then that happened again in 13, 14, 15. We're up to 160,000 now, 60% more than we were at the height of the last, Alberta boom. And well, anyways, we'll talk about whether that Alberta boom is going to continue, but that's a separate topic. Let's just talk about this because there's a lot of people going to Alberta.
Well, this goes back to what we were talking about in 2020, but certainly in 2019. But we talked about it through 2020, 2021, is that Alberta is the place to be and a place to go. We saw rising costs. We saw, the cost of housing, continuing to go up. Here's the fundamental about Alberta. We talked about it back in 2019 because we could see the future. Now we've got lots of graphs and charts, and I'm actually going to do a separate what's behind the curtain and really get into the minutia of why Alberta, why now. And some are thinking they may have missed the boat of investing in Alberta. You haven't. There were the early adopters of those who kind of trusted the research, maybe had a little bit of experience, and they got on board and they started investing in Alberta. Now, JG, you did a deal in Alberta, and I think you exited it, and you were pretty happy because you made some money. And I said at the time, I said, JG, I think you're going to leave some money on the table. And you go, well, I'll never complain about, taking profit. And I agreed with you. But if you reflect on that conversation and you think about where that deal would be today, you left money on the table. Now, that's not a dig. I'm just saying is that when you start to look into the future and you look at these economic fundamentals, we said all along, here's the thing about Alberta. Number one, cost of housing is very low. Cost of living is very low. Food prices, fuel prices. Danielle Smith in this case has said, no, we're not putting in carbon tax.
Plywood prices, I hear, are low over there.
And plywood prices are very low. Lumber prices are much lower. And the point is that there's good jobs, high paying jobs. You don't have the additional HST. There's a whole gambit of reasons that people are moving there. And it's basically a lifestyle choice that can be supported by great jobs. So we continue, and I continue to be bullish on Alberta. Now, add to that the fact that we've talked about this again, is that they're expanded beyond oil and gas. Now I see, oil and gas prices and natural gas prices are down a little bit. And I'm still, based on my thesis, seeing oil prices going up in the next 6 to 12 months. I think that it just can't be avoided. That's a different conversation. I'll get into that and what's behind the curtain that I do. But at the end of the day here, JG, when we look at what's happening of people moving into that province, into Calgary, into Edmonton, all the cities, by the way, are doing quite well in terms of population growth. You got rental demand, and we got demand on housing, which is going to continue to increase. Nice appreciation growth. And here's the other thing, JG, and I've said this so many times, unemployment in Alberta overall is about 6%. That's as close to a sweet spot as you can get. You've heard me say it many times. 6.5% is such a healthy economy. 5.2, 5.3%, whatever the country's at right now, is far too low. And that's part of the challenge that we face. Anyways, go back to Alberta. We look at population growth. We look at the diversity of the economy, which is what I was going to say earlier. It's more than just oil and gas, although oil and gas is going to be strong. We've got new industry moving in there. And one of the reasons that new industry is moving in there is they can get people, and the cost of setting up shop in Alberta is far lower than it is in any other province. So that's why we keep talking about Alberta. And as I said, I'll get into the minutiae and what's behind the curtain for the network.
Wow, Patrick, you get going on Alberta. I can't even cut in. I mean, you're pretty intense there, Mr. Alberta. And have you been watching Kevin O'Leary? I mean, you're just That's kind of what it's sounding like a little bit. But you made some good points. I want to number one defend myself, which is the first thing is I think the total ROI was a 78% ROI on that investment in Alberta in 15 months. I call that pretty kick ass. Number two, I exited, but I put it right back into a better deal in Alberta. So, I'm still listening, Mr. Francie. So that's number one. I want to just defend my decisions there real quick. But you talked about the industries in Alberta. I got this great chart about the industries by share of GDP. Mining slash oil and gas is just under, it's probably about 26, 27%. Real estate's 10%. Construction is about, appears like 7, 8%. Manufacturing, 7, 8%. Healthcare, 6%. And then the rest are kind of like at about 5%, give or take. So, yeah, relatively diverse. Back in the day, Patrick, because I'm not Mr. Alberta. Where was oil and gas back in the day? I think it was above 30% before, right?
Yeah, it was well above 30%. And there's a little bit of a sleeper industry in there that's starting to gain some traction, and that is the, I don't know, call it entertainment movie industry. It is taking on a life of its own in and around Calgary, and that's because it's a beautiful country. But again, when it starts to compete even with Vancouver and or BC in general because of the cost of being able to do productions there. Now, of course, it doesn't have the weather and all the rest of it. But the point is that that's a bit of a sleeper, and it doesn't take much to all of a sudden have $1 billion worth of income coming into the province because of staff and production and all the things that go into making a movie.
I got another chart I want to show here because the quarterly capex for oil and gas industry has been going up steadily since 2020. Q1 2020, which is COVID, is where it fell off a cliff, and it has been rebounding since. We are back now to 2018 levels, but we're far from 2014, 2015 levels. We're currently just about to crest $10 billion of seasonally adjusted capex investment by the oil and gas sector. So it's climbing, which leads me, Patrick. It depends. I don't know how that is relative to their overall budgets and to their overall essentially operations. But I will say this: I think that if you continue, I mean, sooner or later, you keep saying oil prices are going to go back up, and I think if you keep saying it long enough, you might be right one day for a brief second.
I gave it a time frame. I said next 6 to 12 months.
Yeah, and if I rewind this clock 6 months ago, you were telling me that 6 months ago. It hasn't happened.
I always said 2023, late 2023, early 24. It's JG. I'm going to call you on it. It's video. We got it on video.
We got it on video. We should go back. We'll have the producers go back and take a look.
This is the worst.
But I think the point is that what's interesting about this though, Patrick, is if they've been plowing capex back in to there. What I find interesting, a lot of these oil and gas companies are investing pretty heavily into some EV stuff as well. So this capex that they're putting could be on the EV side of things, just the same way the manufacturing companies, Ford, GM, so on and so forth. Like they're plowing capex into their business, but it's not going into the ICE engine. It's going into the EV engine they're trying to produce and failing miserably at compared to Tesla. Side note there. The point is that, at some point, Patrick, they keep plowing capex into their business. If it is going into oil and gas and the demand is not there, they're going to have to keep slashing prices. That's just how the market works.
Yeah, well, there's a couple things, JG, where you can't put EV and capex into this conversation per se. And by the way, Elon himself says, "Do not shut down oil and gas. It's ridiculous." So that's a different conversation. But the capex that you're seeing spending in Alberta, you have to consider a couple of things. They had piled a lot of money into capex in terms of oil and gas over the years, and then between what they'd already put into their existing infrastructure and what they were building, then add technology to it. And so you'll never see. I don't want to say never say never. I don't think we will see a lot more capex going in expectations of what once was. They've already done that. And now between the infrastructure that they had built when things came off the rails, they don't have to rebuild. They've got it. They've been carrying it. And then on the other side of it, technology's changed the game of oil and gas. And so I think we're not going to see as much capital expenditure as we saw, pre-2018, let's go back even to 2014, 2013. They put a lot of cash and capital into it, and they just don't need to rebuild. So I think that you're going to see that not be as robust as it has been in the past.
I agree with you, Patrick. Those are all very good points. Back to what I was saying, though. I'm not saying shut down oil and gas. Listen, that's not what I'm saying here. Relax. Don't go too far there. You're just. I'm not Trudeau. Take your crosshairs off me, Patrick. Relax a little bit. What I'm saying is that it is published and proven that the car industry consumes about 25 to 30% of the oil production in general. And as that consumption shifts over to EV, because it is, and it will over time, not tomorrow, Mr. Francie, don't freak out on me. But as it shifts over time, unless that oil and gas, that production goes elsewhere, overall demand will start to come down. I'm not saying it's going to go from 100% to 5%, but it will go from 100 to 95 and trickle down slowly. And oil is priced at the top end of that margin, so prices could struggle to go up, is what I'm saying.
Yeah, well, we can get into a whole conversation about that. So I disagree, and we can, I'll politely disagree, and we'll save it for another day.
So I think oil prices was my 5th sticky note. So there you go. So it's covered. Yes. Okay. We also covered Alberta. Alberta's done too. 2 sticky notes done at once. That's how great that is. Perfect. That was a good chart.
If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.